morning. You're watching All You Need to Know on BloombergQuint Live, India's first digital live streaming business news service. I am Agam Akil. First, the headlines. 4 more people have died in the United States, taking the coronavirus death toll to 6 cases. In Iran continues to rise as well, and India puts in new restrictions for travel to some countries. The Organization of Economic Cooperation and Development, or the OECD, cuts its global growth forecast to 2.4%, the lowest since 2009. The Indian rupee ends at 72.74 against the US dollar, its lowest level in over a year. 2 new confirmed coronavirus cases and the resultant market sell-off added to the weakness. And jet fuel prices are cut by 10% for the second straight month as crude prices fall. And SBI Card's IPO is subscribed 39% at the end of day 1. Now, it was a day of rebound for the U.S. markets. The Dow Jones saw its biggest one-day percentage gain since March 2009. The S&P 500 and the Nasdaq too saw their the best day in terms of percentage gains since December of 2018. Renita Young of Bloomberg News brings us a wrap of Monday's Wall Street action in this report.
U.S. stocks closed higher on Monday for the first gain in 8 sessions. This is all as investors continue to weigh the economic impact of the coronavirus, and as we are still in the middle of corporate earnings season. Tech shares were among the leaders during the day. ExxonMobil and Chevron were higher, and they will be facing a grilling from Wall Street this week on their returns on capital. Some of the companies that will report corporate earnings include Casper Sleep, Boingo Wireless, and AutoZone. Meanwhile, WTI crude oil was higher during the session, and the Bloomberg Dollar Spot Index was lower, which made perfect sense that gold prices were higher. That's a look at your Wall Street action on Monday. In New York, I'm Renita Young for Bloomberg News.
Well, let's talk about Asian markets then. We have Annabelle Drulers of Bloomberg News is joining us to give us an update. Annabelle, good morning.
Good morning, Agam. Well, as you had heard from Renita there, we had that Wall Street rebound, and that's really playing into the session here in Asia this morning. So the broader MSCI Asia Pacific now edging up 0.6% higher. That's its second day of gains. We've also got China just coming online now, so the CSI 300 trading up around 1.5% higher. Stocks in Hong Kong also 0.7% higher. So a real relief rally. Of course, that is off expectations that central bankers will act in concert to ease this affects the economic slowdown from the coronavirus. So we'll have 2 central bank decisions key in this part of the world today. The first up is Malaysia. That's due later this afternoon. So Bloomberg economists in a survey now seeing 15 of 24 participants expecting a cut, the rest seeing the bank staying on hold. The other one is the RBA. That decision is due in about 2 hours from now. So money markets seeing a 25% basis cut, a 20% chance of a 50 basis point cut. Economists not as in concert with their decision, so that in about 2 hours from now. Finally, this will be key for the Indian session later today. We're watching oil, Brent crude now trading up 3% higher, around $53.50 a barrel. Back to you.
Well, thank you so much for that, Annabelle. We'll be watching out for some of these cues as we move into trade for India. But 4 more people have died in the United States from the coronavirus, taking the total toll to 6. U.S. President Mike Pence, however, says the risk to the United States from the virus remains low and that there is no need to panic. Even as the top health authorities say otherwise. Tom McKenzie of Bloomberg News brings us the latest.
Well, of course, he's leading up the efforts on the US side, and of course they're unveiling additional measures to try and curtail this virus and ensuring, of course, that the health authorities there have what they need. We know there have been problems around testing kits, for example. We know on the economic front as well, the Trump administration is looking potentially at pushing the Fed into an emergency rate cut, and maybe they're also considering, according to our reporting, cuts to taxes, additional tax cuts as well. In terms of the numbers, the data coming out of the US, Washington State is clearly an area where there's concern. There have been 4 24 now reported and confirmed deaths there in that state, and that was after it declared an emergency yesterday, of course. And of course, you've got US health officials, top health officials saying that we are very likely to get a pandemic now. New York has also not been spared. They reported their first case yesterday. The governor saying that he expects additional cases to be reported in that city as well. President Trump, by the way, meeting with the heads of some of the top drug makers in the US, including Pfizer and Gilead Sciences. He says that they think they're going to be very, quote, very successful, according to President Trump. They didn't give many details on any work that's being done towards a vaccine. But of course, the experts in the US, again, have said that it could be at least 12 months to 18 months away before you get a vaccine for this. But obviously, there's longer term planning in place now, because there's a view that maybe this could become an annual event that we all have to deal with. So the focus on the vaccine side there from President Trump. And as I say, there's economic measures as well being considered as we expect additional infections almost inevitably in the US.
Given all of that, President Trump here in the U.S. has been telling drug makers to get it done. President Xi Jinping has been saying something similar for quite some time.
He has. Both presidents now focusing on the attempts to produce a vaccine for the coronavirus. President Xi Jinping visited a research lab, and again, he urged officials there and members of the medical community to work faster on a vaccine. So it seems that both leaders are focusing on the long-term as well as the short-term efforts to try and curtail this virus. We had Premier Li Keqiang. He's taken up the position essentially of Mike Pence, the vice president over in the US. He's leading up efforts here in China to try and contain this virus. He says that this is a pivotal moment now in the containment efforts. Of course, Chinese officials are concerned that you may see another spike in infection rates as people return to work. But so far, that trend of moderating infection rates has continued, and that's certainly a positive. We're waiting for the latest data out of China in terms of confirmed cases for today. Yesterday, the numbers reported were 202, which is the lowest additional infections that we've seen since January the 22nd. So that's a positive trend, of course, that many here will be hoping continues if, again, and there is a caveat around this, if you believe that official data. Here in Asia, of course, the other hotspot is South Korea. More than 4,300 confirmed cases. Daegu City is firmly in focus there. The World Health Organization saying it's not too late, though, for South Korea to try and contain the virus, but there is, of course, mounting concern in that country. In the Middle East, the hotspot really is Iran, where you've got 1,500 confirmed cases, at least 60 confirmed deaths, and we know that the World Health Organization has flown over there with testing kits for as many as 100,000 tests. And in Europe, of course, you're seeing more cases in Spain, Italy. The UK has 40 cases, and the European Union is setting up a special task force to try and coordinate efforts there.
The Federal Reserve will be reluctant to do an emergency rate cut, according to Mark Matthews of Julius Baer, speaking to Bloomberg Television earlier in the day. He also spoke about the economic implications of the coronavirus outbreak. Listen in.
I think the Fed would be reluctant to do an emergency cut, for lack of a better way of putting it, because they don't want to look like they're slaves of the market. So I think a lot depends on the market itself. If it can regain some confidence and continue this rebound, then in a way it becomes a self-fulfilling prophecy, and they can wait until March, and maybe in March they won't even need to cut. So I think actually the market will answer that question for us.
Mark, could the Fed do something other than outright rate cuts, like we've seen, for example, with the BOJ just trying to add liquidity into the markets?
Yes, so for sure. And one thing they did start doing at the beginning of this year was they no longer continued those big repo operations that they were doing late last year. And the Fed's had a history of intervening in the repo market. They did it just before Y2K. They did it after September 11. Let's see, there was the global financial crisis. Maybe I'm missing one time. But anyway, they did it late last year, and they scaled it back. And I think that would be an easy thing to provide liquidity to the market through the repo market, open market operations.
In terms of how the rest of the world fares, can we assume that if we don't get any more sort of massive lockdown type containment measures taking place elsewhere, we know we've seen that in part in Italy, in South Korea, of course, all over China, that the resultant damage to the global economy can be measured to the same degree?
Well, that's a complicated question, but I'll try my best to answer it. There's a fine line that governments have to walk between containment and shutting the economy down to the extent that it causes so much damage that it's not worth it. So I think China kind of realized they'd gone past that stage, and thankfully they'd also managed to contain it. So now they're bringing things back. But if you just walk down the middle line, actually, you end up making nobody happy because people die and the economy's bad. The thing is that I guess the economy's not as bad as it could have been if you'd shut the whole thing down, and then probably less people die than if you kept everything going as per normal. But I guess what I would say is I do think China is a lead indicator. Obviously, it's where it started, and what we can see is that even if the numbers are not entirely correct, I think the direction is correct. And the WHO just released their situation report from their visit there, and they believe the numbers are definitely trending down and it's being contained based on their own anecdotal evidence. So I think that now that China's starting back up, getting back to work, you can extrapolate a similar trend in the rest of the world. But right now the rest of the world is in that kind of panic and lockdown phase that China was in a month ago. So I guess there's just various phases of acceptance of a reality or of a truth. And right now, China's kind of coming out of it, and the rest of the world's going into it.
And now let's see what's making headlines across the globe. Karina Mitchell of Bloomberg News brings us the first word headlines.
The world's top finance chiefs will lead a global conference call later Tuesday to discuss the response to the economic threat posed by the coronavirus. We're told the call will happen at 1 o'clock Paris time, with ministers joined by central bank governors. The OECD says global growth may sink to levels not seen since the financial crisis, and central bankers are pledging to shore up their economies and markets. A key gauge of U.S. manufacturing declined to near stagnation last month amid mounting concern the economy might not dodge a hit from the coronavirus. The ISM index slid to 50.1 from 50.9 in January, a steeper fall than seen in a Bloomberg survey. 3 of 5 parts of the index fell, led by the biggest drop in production since 2018. And an IHS market gauge fell to its lowest level since August. The long-awaited trade talks between the UK and European Union are underway in Brussels amid rising tensions surrounding Prime Minister Boris Johnson's threat to walk out if there's not enough progress in the coming weeks. He wants agreement on commerce, fishing rights, and financial ties by the end of the year. Other major trade deals usually take several years to conclude. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg.
Let's take a look at how trade has set up for Indian markets, and we have Darshan Mehta who's joining us to give us an idea on the same. Darshan, hopefully, perhaps today the recovery can sustain.
Yeah, so yesterday it did manage to sustain, but that flash about coronavirus getting in India, that spooked the market. But overall, it was looking strong. Today, everyone's watching out and speaking about how the Dow rallied 1,200 points, but the enthusiasm still not there on the SGX Nifty.
Right.
It's up just 27 points. So if the Dow was up 1,200 points, most people would have anticipated at least a 200-point uptick on the SGX Nifty. It's not happening. Even I'm rather surprised with the move that's coming in as far as the Japanese markets are concerned. That too is rather muted. So it'll be interesting, no doubt, probably in the positive, but it'll be interesting how we will take off from here. Yesterday was a very interesting day. We ended down by 69 points, and there was a big sell-off on the mid-cap and the small-cap end of the market, despite us being up almost 200 points on the Nifty. What was more interesting was the Nifty Bank pulled that up, and the traction that was there. The Nifty PSU Bank was down almost 5% in trade yesterday because SBI was down 6%. Now the Nifty Bank, now you're seeing this as being down 300 points, but remember, it was up 600 points at one point of the day, so the correction is almost close to 1,000 points from the day's high. So you could see the volatility that is there as far as our markets are concerned. So clearly there is fear in our market because people don't know what's happening with coronavirus, because it's finally come in here. The other aspects is how do you deal with the ADR. So yesterday, despite the Dow being up significantly, most of the ADRs were down in trade. ICICI Bank managed to rally. It was up here also in trade, so that was up. Infosys and Wipro, we spoke yesterday that IT probably is now taking the leadership position in our market, and that exactly is what is happening. How did the flows pan out in trade? Again, net selling to the tune of 1,300 crores by the FIs, and DIs bought in 1,100 crores. So whatever the FIs are selling, DIs are managing to buy. A couple of points, SBI was down 6%. Over the past few days, we've seen excessive selling that's happening on Reliance Industries. That was down 3%, and that seems to be another concerning factor that the market has. L&T and Kotak, despite a strong move from the Nifty Bank in early trade, Kotak somehow didn't manage to move up in trade. So that was traction. What helped was basically some of the companies on the banking side, ICICI Bank and HDFC Bank, and that is why you see that the Nifty Bank didn't fall as much as the Nifty PSU Bank. IT contributed. HCL Tech was up another 5%. So IT and some of the private sector banks helped the Nifty. Otherwise, the fall would have been much higher. So that's what we saw as far as the cash market is concerned. Yesterday, if you remember, we spoke that the Nifty discount was almost 50 points. They've managed to narrow it down to just 9 points as of now, and that is why some of the FNO stocks saw much more rally, because the discount was definitely widening, narrowing for them. Obviously, long unwinding was seen. Open interest was down 10% on the Nifty. On the Nifty PSU Bank, again, it moved into a premium from a discount. Open interest was down 7%, indicating that there was long unwinding that was seen. Now we are very close to the 11,000 mark in trade. What is happening is that still put writers are active from levels of 11,000 to 11,300, and call writers from 11,300 to higher level. But still we are at lower levels, which gives an indication that the market is looking at a short-term support coming in at levels of 11,000 to 11,100. That's where the market sees a bit of support that's coming in. What happened in trade yesterday? At higher levels, put writers were forced to shed positions, and call writers again became aggressive in the second half. So the trend pretty much reversed, because first half it belonged to the bulls and the second half it belonged to the bears. Now, as far as the volatility was concerned, up 9%, given the fact that yesterday we saw intraday moves of almost 500 points on almost 1,000 points on the Nifty Bank, and almost 300 points on the Nifty itself. PCR managed to move pretty much at the same level, because first half there was put writing and the second half there was call writing, so they pretty much negated itself. That was the trend. Now, stock specific, again, Info Edge is in the FNO series from this series, so that's an open interest build up of 75% on the long side. PVR again, and this fell post PVR and Interglobe, both of them fell in post the coronavirus news that came in, because these are the two sectors, multiplexes, aviation, some of the consumer names are most affected because of that. Escorts rallied because of a strong sales number that came out, and Motherson Sumi because of the fall that we've seen in certain companies on the European indices, and the coronavirus was down in trade. What moved? Tata Chemicals was down, seeing long unwinding. Torrent Power saw a bit of short covering that came in, and Eicher Motors pretty much was the star of yesterday. It cooled off from the highs of 6-7% post the sales number, but that saw short covering. So again, I'll watch out for Eicher Motors in today's trade, and obviously I'll also watch out for Hero MotoCorp. That number was pretty decent, so I'll watch out for that counter today.
All right, Darshan, thanks for getting us those updates. So, well, possible recovery seen. Let's wait and watch as to how and what the opening brings for us. But speaking of stocks, let's get in Somit Sarkar, who's joining us to give us the stocks and news. Somit, good morning. Which are the stocks that will be at the center of the action today?
Good morning, Agam. I'll start off with Hero MotoCorp. The February sales numbers were down, which are down nearly 19% compared to last year, to close to 4,98,000, but this was largely in line with what the analysts were estimating at close to 5,10,000 units. Infosys, because they have paid the compounding fees of nearly 6 lakh for certain offences that pertain to a severance agreement executed with one of the former CFO in October 2015. The company had sought compounding of these offences from MCA on November 8th. Torrent Power, because the company has been handed over the commercial operations of Sheel, Mumra and Kalwa divisions by the Maharashtra State Electricity Distribution Company. Now, on January 3rd, the company had won distribution franchisee of electricity for these areas. Parag Milk Foods, because the company has clarified that the promoter has pledged nearly 1.87 crore shares with Kotak Mahindra Bank, Kotak Mahindra Investments, and of the total loan amount taken from Kotak Mahindra Investments, the promoters have repaid nearly 31 crore of that, and the outstanding loan amount currently stands at close to 33 crore, which the promoter is confident of clearing within the next 90 days. Cox and Kings, because the newly appointed statutory auditors said that the audited consolidated financials for financial year 2019 for one of the key overseas subsidiaries Prometheon has been forged and were not signed by the auditors of the company. Instead, forged financial statements were used by the previous statutory auditors of Cox & Kings for the purpose of consolidated financial statements. So this counter will be important to watch out for. And 3 stocks that would remain in focus on the back of the default reports that they have put on the exchanges. Firstly, Tilaknagar Industries, they have defaulted in payment of term loan worth nearly 15 crore due on January 31st. The total debt stands at close to 561 crore rupees. DB Realty, because they have defaulted in payment of an intercorporate deposit worth nearly 85 crore rupees on February 1st, and the total debt of the company stands at close to 646 crore rupees. And lastly, Reliance Capital, because they have defaulted on a term loan on January 31st due to HDFC and Axis Bank, and this delay in debt servicing was due to prohibition on the company to sell off their assets.
All right, thanks so much for getting us those updates, Sumit. But the Coca Cola company plans to double its India volumes over the next 5 years after managing to sell 1 billion cases in the last 21 years. It plans to double the same over the next 5 years. How do they plan to do so? Chairman and Global CEO James Quincy explains this to Charlene D'Souza in this conversation. Listen in.
What we're focused on now is getting our investment plan that was running through to 2022 completed, preferably on or ahead of schedule. That will support the growth that's coming for the marketplace. We've set ourselves a target of doubling the business in the next 5 years. And then, of course, after 2022, we'll have another investment plan to take us further out in the future. But we continue to invest because we continue to see great long-term potential in the marketplace.
So right now, there is no further investment plan at this point in time that you've planned for India?
Well, we've got to implement the plan we've got on the table first, and that's a huge plan to invest in manufacturing and in brand innovation. So that's a lot of money that's got to be deployed into the marketplace. And of course, when we've done that, we'll have a new plan.
You've always mentioned on your conference call with your investors that India and China are one of your fastest growing markets for you globally. Now China has taken a hit. There's no consumption. Obviously, you've already put your contingency plans in place, as we've mentioned. But will that push now be on India to deliver, higher growth rates, and what are the kind of plans that you have right now in terms of pushing your distribution also in the Indian market to make up for the loss that you'll face in China?
It's not our approach to try and change the business plan in one country because of what happens in a different country. We have a great team and a great plan and great partners in India, and we're going to stick to that plan. I think trying to force it to go one way or the other in the short term tends to result in less rather than more. So we've got a good plan in India. We're going to stick to it. We expect the situation in China to be temporary and the market to come back. So we're not going to go around the world and disrupt our other markets on the basis of trying to make up for China.
Okay, the Indian economy has not been performing that well. We've seen a slowdown in the GDP growth rate, but that has not impacted Coca Cola because of your lower price points. That's actually helped you grow even better when the higher price point drinks have actually been impacted. What is your strategy from here on to actually take advantage of this situation? Because we've seen the category grow because of the slowdown and the lower price points at this point in time.
I think the growth in a marketplace, of course, depends on the GDP and the money available, and of course there is still growth in the Indian marketplace, but it also depends on what you do and the strategies you follow and the degree to which you execute them with excellence. And so what we focus on is the long-term potential of the Indian economy, and we focus on executing our game plan, which allows us to win market share and to offer products, whether they're more premium or more affordable, and that helps us grow the beverage industry and gain share within it, and certainly it's been working for us so far.
Okay, would we see more lower price products come from your end? And also, will all of these products actually have lower sugar content? Because that's what you said, that eventually you're working on bringing products with lower sugar content into the market.
I think it's to be expected that we will continue to innovate in lower price points for our products, whether they're the brands you know today or whether they be new products. We'll certainly be looking at how we get the entry price points, and absolutely we'll be doing that within the context of our overall sugar reduction strategy.
And that's a wrap on this edition of All You Need to Know, but stay tuned to BloombergQuint for more news and updates.